In today's episode, I'm going to break down the price action on GameStop, and I'm going to share with you the 7 reasons why, at this point, after watching today's sustained and heavy sell-off, I don't think we're going to see another short squeeze on it like what we had back in 2021. So what's different? Well, there's 7 things that are different, and the first is that the short interest is only 21%. It's simply too low. Back in 2021, one of the things that made this so incredible was that the short interest was literally in excess of 100%, which shouldn't even be possible, but is possible and actually happened. And what that means is that so many people were holding the stock to the short side that they literally could not cover all of their shares based on the amount of daily volume that the stock was trading. It would take days and days and days for them to cover, and they would have to be buying all day long. And when you have that much buying, what happens? The stock squeezes up. And that's exactly what happened in 2021. So right now, the short interest, well, shoot, it's only 21%. This is the first big issue. Now, I noticed this morning. I took a look at GameStop, and if we look at the daily chart, what you'll see today was heavy selling. We've got this big red candle, which has kind of prompted me to do this video and to really think more closely and carefully about why we saw this degree of selling today. We also had a big red candle just a couple days ago. And what triggered all of this, for what it's worth, is that Roaring Kitty, aka Deep Effing Value on Reddit, made his first tweet just back here for the first time in years. And he posted a meme that things were getting serious. And immediately everyone piled in to GameStop. And I thought, this is incredible. He hasn't even said he's in it. And all of a sudden people are buying it up like crazy. And so this was just 2 weeks ago. GameStop squeezes all the way up to $80 a share. Look at this move. I mean, this was insane. But here's the problem. We had this incredible move, but it came all the way back down. All the way back down. So it gave up the entire move. We're back down here at $22. But what we've now learned is that during these days right here, Roaring Kitty, aka Deep Effing Value, was accumulating his own position. In fact, he posted last night on Reddit, and let me just show you right here. So he posted last night on Reddit. So when he posted, the market was already closed. So, and of course it was Sunday, so the market was closed. He couldn't, no one could do anything, but he posted that he was now in a position of 5 million shares and he'd bought 120,000 option contracts with a $20 strike price. And these expire in just a couple of weeks. Total position, $174 million. And he effectively controls 5 million shares right here. And these 120,000 option contracts control 12 million shares. So this is 17 million shares right here, which is a huge position. I mean, this is insane. And so the first thing I thought when I saw this was, all right, it's on. Everyone's going to be buying this first thing Monday morning. And so I actually sat down here at my computer at 3:15 a.m. because I knew at 4 a.m. trading would begin. And so what I decided to do before I made any plans to actually buy a position was first just verify that this was actually the real deal, that this wasn't like someone who had hacked his account. So I went over to his Twitter and I saw that, there was nothing saying, oh, my account got hacked. He, in fact, had posted a meme at basically the same time right here. And so I was like, okay, we've got this meme posted. He's not denying it. It seems like this is legit. And then I thought, well, geez, 120,000 option calls. That's an insane number of option contracts. So I noticed that Unusual Whales had made a post that they had been tracking the purchase of these option contracts over the last several days. And what they said was that, they had been monitoring this. Someone, a whale, is buying a massive number of contracts. And so I thought, okay, well, they tracked it. And I actually pulled up Thinkorswim and I actually checked. I said, you know what? I want to just see if there's even enough open interest for someone to have bought that many of the calls. And in fact, you could see right here that we actually have 145,000 contracts of open interest. So I was like, all right, I've confirmed it. This seems legit. He actually bought this many shares and option contracts. But then I thought again to myself, well, but what's the short interest? And so then I go over to this website and I check the short interest. And the thing that I noticed was that the short interest on this was only and is only 21%. And I thought, 21%, that's not high. I mean, it's not low, but it's not high. 68 million shares are short. So I'm like, okay, there's some short interest, but not anything like what we had in 2021. So in 2021, when the short interest was 100%, the stock was so beaten up that it was basically at rock bottom. So the thing there is that if you actually wanted to short it at that point, it was very hard to find shares to borrow because they had all been spoken for. Everyone who wanted to short it was already short. You couldn't add more. And so at that point, we had something else that we don't have right now. We had deep value. When I say deep value, I mean that the price was at the lows. It had been beaten up so much and it had been shorted, just pounded to the ground, that now you have a stock that's at the lows with 100% short interest. And all of a sudden, with a little bit of curl off the low, if it starts to squeeze up 20%, 30%, even 40%, 50%, doesn't have to go up a lot. All of a sudden, you have all of these people who are short who can't add to their position. They just have to cover to get out. See, that's the thing. If you're in a losing position, you have sort of two strategies. One is just to bail out, and the other is to average down. Average down means you're short, the stock goes up a lot, and you just add more shares, and then it goes down more and more and more. So as it goes down more and more, then you'll recover, but you need to be able to add more to your position. And if you can't add more to your position, then you can't work your way out of the trade. So when the short interest is already over 100%, these big short sellers, they were already fully loaded. They couldn't add more. And so when it started to squeeze, all of a sudden, they're getting pinched. They're up against the ropes. And retail traders saw this as a deep value, buying something that was so oversold that the curl off the low just kind of made sense. It was like, yes, this is just a good idea. So we had, at the time, high short interest. So if we talk about 2021, it was over 100%. When we talk about deep value, we had it back then. Today, we don't really have it. And number three, a thesis. This is a big deal because Roaring Kitty put out a thesis in 2021. And even at the end of 2020, he was making videos. He was telling people why he loved GameStop. He was talking about the short interest. He was talking about the deep value, the potential, the story. This was what got people excited. And, yes, he was taking a YOLO trade on it. And it truly was like, for someone that didn't have a lot of money, rolling it all, kind of out there, putting it all on the line for this big move. He really believed in it. And that got other people believing in it too. But what we have here, we don't have a thesis. All we have is a screenshot of a massive position, which by itself, is like, that is a big position, but I don't know the thesis. So I'm having a hard time understanding exactly what, is sort of the catalyst here. Because if we talk about value, let's look at the price. The price is still, at $20, it's still at $80 a share because they did a 4-to-1 reverse split in 2022. So this isn't really beaten up or undervalued. It was undervalued way back here when he was buying it at what is equivalent to like 19 cents a share. So buying at $21, that doesn't feel like deep value to me. So number one, short interest is only 21%. Number two, we don't have what I think is deep value. Number three, I'm not hearing a thesis from Roaring Kitty, and that's what I want to hear. I want to hear the story. Number four, the options are in the money. That's not YOLO. YOLO is out of the money. So what do I mean by that? When you're doing a YOLO trade, and I'm not the expert on YOLO because I'm a day trader who focuses on consistency and just being green every day. And you can see today I'm up 15,000 trading GameStop, which is nice consistency. But YOLO is when you buy the $100 calls. You're buying the $150 calls. You're buying the $200 calls. Those are out of the money, OTM, out of the money. So he posts here that he's bought the in the money calls at $20. So the problem with buying the $20 strike price is that he's already in the money. What he can do is he can exercise this and immediately convert it into 12 million shares at $20 a share. So it's not really that speculative. So to me, there were a couple of things that needed to happen if this was going to go to the moon. And none of those things happened. I'll list those separately. So the things that needed to happen to send this to the moon. Number one, we needed out of the money calls to force a gamma squeeze. All right. So when you have, So when you have out of the money calls, when people start buying the calls for $100, $150, the people who are writing those calls have to hedge their position by either owning the actual stock, or what they do is they buy calls that are just a little bit further ahead. And then that again forces someone else to hedge that and hedge that. And then next thing you know, you're creating all of this buying. And the way people ultimately protect that is by buying shares. Because when you buy calls, you're buying the right to purchase stock. So someone has to have that stock so you can buy it. And if they sell the calls without having first accumulated the stock, then they're naked to position. They can lose an infinite amount of money, which market makers seem to always find a way to, move the market in their favor. But in the case of GameStop in 2021, it just kept going higher and higher and higher. And as you may recall, it was absolutely incredible. But that's not what was happening here. We had out of the money calls. We had in the money calls here. We needed out of the money calls. And so if he had just bought, to be honest, considering he bought $174 million worth of stock and options, if he had just bought, $1 million of calls that were $50 and $100 and maybe $150, just to really put some YOLO on it, that would have put a optimistic profit target of like, this is where I think it's going. And that's what he did before, but he didn't do that this time. So that was different. We didn't have the out of the money calls. We just had the in the money calls. And the reality is, for what it's worth, he's got 120,000 contracts. And today, even with all this volume, there was only 9,000 contracts of volume. He didn't sell any of it because he posted today that he didn't sell anything, but he kind of can't, because there's not enough volume for him to sell. So that means what he's going to probably have to do, and I'm just speculating, but he's going to have to exercise these options. And that means he needs the money to buy 12 million shares, but he only has 30 million here in cash. So he's going to need more money to go into his account so he can actually exercise on this contract to buy 12 million shares. And then he's going to be in 17 million shares, approximately $20, $21 a share, which, okay, that's a huge position. So number one, again, just to sort of really hammer this home, we don't have short interest. We're not on a deep value kind of position. We're not hearing a thesis. At least I'm not. So I'm not understanding exactly why we should be buying here and what the story is. We don't have, we have in the money options. We don't have the YOLO out of the money options. Okay, number 5. Reddit traders have already been burned, to be honest. I mean, they got burned in 2021 with Robinhood and everything else, and then kind of got burned again when, the price squeezed up here and then came all the way back down. And to be honest, if the Reddit traders, if they hadn't already gotten burned, then they're probably not going to get in now. I just feel like the army of Reddit traders that we had in 2021 isn't the same today. And so, well, maybe that brings up something else that's different. We're not in a pandemic lockdown with government stimulus. So we don't have government money and all of us working from home because, times have changed. So then number 7, if we're going to be honest, 5 million shares and even 17 million shares total, 5 million shares is only about 1.8% of the float. 17 million is like 5-6%, just about 6% of the float. The float's a lot higher now than it used to be because they did the split. And I think they might have done an offering as well. So we're talking about 269 million share float company. And because of that, I just, these are the reasons why we're not seeing that big move today. We don't have it. Look, if we had had 100% short interest, all this other stuff changes, but we didn't. If he had had the out of the money option contracts, the calls, that would have helped a lot. And it would have encouraged more people to buy out of the money option contracts, which would have forced more buying of stock. That would have helped. Reddit being burned, the pandemic, those wouldn't change. This, well, again, it could maybe be overcome with a good thesis and everything else, but all we got to work on here, to work from, as you can see, was this screenshot. And then there's a lot of people asking questions about, well, why are you getting options that expire in 3 weeks? And how did you grow your account to 200 million? Is someone investing? Is this like you and someone else? Is this just from your trading? I mean, not that I guess it really matters, but how are you going to exercise these without more money? And there's not enough liquidity to actually sell them. So what I kind of feel like happened today is big money kind of saw through this post and said, they are smarter than most of us, I guess. And they kind of put this together pretty quickly and were like, short interest, it's not deep value, there's no thesis, the option contracts are in the money, start selling. And they just started selling. So this morning when I took my first trade on it, I sat down, I woke up at 2:15, I sat down at my computer at 3:15, and I was ready to trade at 4 a.m. And I traded at 4 a.m. As soon as the opening bell rang for pre-market, I took my first trade. I tried to buy at $32. My order did not get filled. The price jumped without me. I then chased it a little bit, adding at 33, 34, 35 as it was squeezing up. I took profit once we got this first red candle. So actually I took a little bit profit here and I sold the rest up in this area. So I tried to hold as long as I can, but as I mentioned earlier, I'm paper-handed. I'm weak. I've got these lettuce hands. There's no substance here. This is the way that I've always been though, because I trade. My philosophy is that I'm a trader who focuses on trading for income. So I can't afford to just buy at 33 and just hold and let it ride. Now, there was a part of me that was thinking if I had just held the whole position from 33, I wouldn't have had to sell. I could have just held and held. And then at the open, it started coming down. We broke through volume weight average price. We came lower. And then at the open, we actually halted down several times. Now, I want to show you this deep view of the market today. This is going to show you the actual orders that were placed on the book. And I think this is helpful for you guys to see who aren't already familiar with this. Now, this is kind of expensive software. It's not something that probably most of you would have access to or maybe afford. But this is the beginning of the move. Let's see if I can kind of make this just a little bit bigger for you. So I just want to try to zoom in here on this spot. So let's see. Sorry. Okay, so what you see here is basically we open at 4 a.m. with this red sell. This is a sell order. So a sell order goes through instantaneously. And although there were some buyers, and I was one of them, there's a lot of selling. People are selling as it's going up. And so you've got these people that are marketing sell orders as it's going higher. We get a big sell order here, another big sell order here, another big sell order here. And at this point, it's really like it's kind of weak. And I'm looking at it thinking, we're seeing some buying, but really a lot of selling. Now at 7 a.m., we get a surge of volume. That's because most traders can't trade from 4 a.m. till 7 a.m. unless you're using a broker like I use, which is really catered for institutional traders and professional traders. Now, I've been doing this for a long time, so this is the platform that I've been using. But 7 a.m. is when brokers like Robinhood and Thinkorswim come online. So we did get a surge right there, and I got another trade in that move, and then it rejected pretty badly. It sold off hard. And as it sold off here, it just starts going lower and lower and lower. So unfortunately, as I was looking at this price action at the open, I was just thinking, first we sell off, we halt down. I was looking for an opportunity for a bounce. And I did catch a couple of bounces on this. One of the better ones was right here off of $30 a share. Look at this big buy order that we had right here at 30. About 100,000 shares of buy orders right there at 30. And we got this selling pressure down. We sort of bounced there off of this little buy order. And then another bounce right here. I took that bounce. But one thing that I also noted was as I was looking at this pre-market, I was noticing that we had a lot of sell orders, but not a lot of buy orders. So when I was looking at the tape, I was seeing all of these orders, these big sell orders here at 50, this sell order up here at 60, right? Lots of sell orders, but not a lot of buy orders down here. Only a couple lower, but not as many. So it felt like people were really ready to sell, just to unwind. And then I saw some big short sellers who were bragging about, having taken a short position on this and talking about how some of the same things I'm talking about, that this was, this is a no-brainer short. There's not enough short interest to create a squeeze. And so unfortunately now, as we sit here, the price is up still on the day. I mean, I'm not going to say it's not up. It's up 26%, but it's not up a ton. And then to make matters maybe a little bit worse, we got a news headline from the Wall Street Journal. This was this was from a little while ago, but they said E-Trade considers kicking meme stock trader off of the platform. So these screenshots are from E-Trade. So that's the broker that he's been using, which is fine. It's a fine broker, but they're considering kicking him off the platform. So this is one of these things that feels a little, I don't know. I mean, it feels a little unfair in a way to retail traders, because you have these big money investors. He'll go on CNBC. They talk about all the reasons they like a stock, whatever. And, people have been doing this forever. So he's protected by freedom of speech. He can say he's in. He can say he likes the stock, and that's fine. But, these brokers, they all get worried about compliance and this and that. So when that happened, that news came out. It was right about here where we have this big red candle right here. And so people started wondering, wait, are they going to liquidate his position, or is he going to be locked out? Like he can't sell even if he wants to. So there was some question there about, what's going to happen. And I don't know. I mean, it's not confirmed. It's just it just is a note there. So, and in any case, so he's in these calls at about, I think it was $5. What was it? $5 a contract, something like that. And now the price, as you can see, has come down a bit. It was quite a bit higher earlier, naturally. And the price has come down. And this is sort of the situation. He can't sell because there's not enough liquidity to sell. And so now I feel like he's shown his hand to Wall Street, and I feel like Wall Street wants to get him back. That's kind of what I feel. And I feel like it's not fair, but it's what I'm concerned is going to happen. And now he's got 17 million shares, 6% of, well, more or less is what I think is going to happen. At 6% of the current float, and the price is coming down. And, GameStop, I mean, what are their revenues? They've got a lot of cash in the bank, but, they're still, this is not an NVIDIA or something like that. So, unfortunately, like I said, I'm as disappointed as anyone else, because this morning when I was first looking at it and it was up 80%, I'm starting to look at the daily levels and I'm thinking, all right, if we squeeze through, $80, this could be game time. But I was shocked at the degree of selling. And I think that this just speaks to the fact that, and a kind of combination of things. Short sellers, I'm just going to scooch this over here for 1 second. So we didn't have enough short sellers that were forced to cover. We didn't have the thesis and the Reddit traders coming in. We didn't have the pandemic lockdown and the government money. So all of this kind of came together to be the opposite of a perfect storm. 2021 was a perfect storm. And we were there at the right time, and a lot of us did really well on it, and I did, and I'm so grateful for that. But I hoped that this would be a repeat of that, and I'm kind of surprised that it went higher on him just posting a tweet 2 weeks ago. But maybe there was the element of surprise there with that tweet. And all of a sudden, people were caught off guard and they didn't know, what is he in at? How much is he holding? And there was a sort of question. And now that element of surprise is gone. He's shown his cards. And in some ways, he's shown a degree of weakness, because now we all know what a huge position he's got at what a high price he's in at. that he doesn't have enough money in his account to exercise the option contracts that aren't liquid enough to seemingly sell, but we still have 3 weeks till expiration. So, who knows? Maybe it's gonna, but look, he then posts after hours. He makes another post after hours that he's up. And he's up $78 million today on this position, which is a crazy amount of money. No question about it. But there's still the main concern of like, how is he going to exercise this? He could sell some of this stock. I mean, it's just, I don't know how it's going to happen. So, and the fact is, if we're also going to be honest, at the peak here, he must have been up like $300 million. And it dropped 20 points from 48 down to 28. So when you got 17 million shares, every 10 points is $170 million. Wow. I can't even, I mean, there are few people that have made and lost that much money in a lifetime, let alone in hours. Unrealized profit, but, again, he's still green, but I just don't know if there's enough liquidity to easily move in and out of the position. The fact is today, it had 164 million shares of volume, which means if he wanted to sell his full position, he could have, but he would have been 10% of the volume today. And if you added, 17 million shares of selling today, the price would have been even lower. So if you try to do 17 million shares of selling tomorrow or in any one day, the price is going to come down hard. So now the problem is after these big moves, volume usually declines. So you have periods of lighter volume, which makes it very hard to move in and out if you're a whale with a big position. So now I don't know. I'm really not sure what's going to happen. Again, I'll share with you that this is all just my opinion and it's speculative because we don't know answers to a lot of things. But, as I kind of looked through the price action today and watched the sell off and thought more about it, these are the things that I was initially I had 3 and then I was like, well, actually there's this and this. And then I had 5 and then I was like, well, don't forget about this and this. And I had 7 and I could probably add a couple more reasons, why I kind of see the price coming down. But nonetheless, I traded it this morning. And although I have these little lettuce hands, I did make some money on it. I am in the green and that's a great way to start the month of June. And I traded GameStop more or less the same way back in 2021. And, I trade the price action that's right in front of me. If you want to watch me trade in real time, hey, you're welcome to join us. We've got 2-week trial at Warrior Trading for $20. So you can use these same scanners, you can use the same charts, you can use the same news feed. You can watch my audio video broadcast. You can see me, in real time trading the markets. I'm a little fish. I'm the small guy. We're little retail traders. We're just trying to make a little piece off the waves that these whales make. And, I made my piece today and I hope you guys did as well. I hope you're smart. I hope you manage your risk, didn't overstay your welcome. But I will also remind you that there will no doubt be other opportunities in the future. And some of those might be a lot easier to trade than this. This was clean for like 2 candles and then the rest was kind of difficult. So, sometimes that's the way it goes and that's all right. We'll get the next one. That's the nice thing about trading. There will always be another stock around the corner. And if you think about all the trades I have taken just over the last few years, I mean, GameStop was obviously incredible, but let's just talk for a second about, hold on one second, bud. Let's just talk for a second. I'm just going to back this out and show you my metrics. Let's see. So I'm just going to go from, 20, I don't know. It doesn't really matter, but from 1/1/2020, we'll do 6. We'll do 3 just after GameStop through today's date. So like this was after GameStop. GameStop had already happened. And then since then, profit here, $4 million trading every single day, right? This is number of trades, 12,000, just showing up every day, trading the markets, green, red, focusing on trying to be consistent and just, I'm just here every day. I focus on trading stocks that have 5 times higher volume today than average. That's usually the result of news. I focus on trading stocks up at least 10%. And, this is the strategy that I trade. Today, GameStop absolutely fit within my strategy to trade it. Tomorrow, it's not going to fit within my strategy unless it goes up more than 10% and has high volume, but I just don't expect it. So I want to thank you guys as always for tuning in. I hope you hit that thumbs up. I hope you're subscribed to the channel, and I'll see you for the next episode real soon. Don't forget to check out the 2-week trial at Warrior Trading. And I'll remind you as always that trading is risky. My results aren't typical, so manage your risk, take it slow. I'll see you back here first thing tomorrow morning.